All right. So a little unusual. We're doing back-to-back live Facebook interviews. Joined here today again with Mitch Friedman, who is one of our preferred lender partners. Because this question comes up often for Mitch, which is around down payments for buying. All right, I think I'm back. Can you hear
You're
me, Mitch?
back. I can hear you. You're back.
All right.
All right.
Lost right there pretty quick in the beginning. So, um, yeah, this question comes up often for Mitch about acceptable methods for down payments. Right? If I have not been stashing cash aside, from my W-2 employment income, how can I come up with the down payment to purchase a house? What is this going to look like? So this is something that Mitch has consistent conversations on. I know we talk with a lot of buyers who are in those situations. So that's what we're going to discuss today. With that, Mitch, how are you doing? How have you been?
I've been very busy with low interest rates still, which has spawned quite a bit of activity in our industry. One, from a standpoint of new home buyers who are taking advantage of the lower rates, which you may talk about as well from a standpoint of the current market demand. And secondly, a lot of people who do currently own a home are looking to refinance. And so that's been extremely busy as well. So it's all been very favorable, but it's also been a lot of kind of clogging up the system, so to speak. And so things like appraisals and title insurance work and review of files have taken a little bit longer just through the sheer volume of business that's come in. But it's all very favorable. Things are just taking a little bit longer. So been working 7 days a week, 18 hours a day, and it's been good. And I think it'll maybe the holidays will kick in and we'll have a little downtime.
Well, don't ever anybody think that for some reason this is just a super easy job and that lenders don't put in a lot of good long hours.
Yes, we do. And communication is key to all of it. So that's why we're constantly doing many, many emails daily and phone calls and texting just to make sure everybody's aware of what the status is of their files or what the market environment is right now.
Yeah. A lot to keep up on. And as always, if you're tuning into this Facebook Live, drop a comment. Let us know what questions you have. We'll try to get those answered, especially the ones that are on topic, as we talk to Mitch about lending. So walk me through some things. I mean, most people, and you've shared this with me, and this question doesn't come to me nearly as often as it does for you. There are still folks that have the misconception that they need 20% down to buy a home.
That's correct. I do get that a lot when I speak with someone initially to talk about becoming pre-approved. And one of the factors is how much money do you have available to use towards buying a home for a down payment and closing costs. And oftentimes the response is, well, I just don't have enough yet because I don't have 20% down.
Mm-hmm.
And when I respond to that and saying you don't need 20% down, in fact, if you fit certain parameters, you don't have to have any down payments to obtain financing. I don't see them because we're on the phone, but I hear the kind of the gasp of, I had no idea I could do that. Let's continue to talk because I do have some money. I just don't have 20% of the purchase price as far as liquid cash. So it's a wonderful starting to a conversation because it brings a lot of favorable, positive information back to the buyer who really thought they couldn't do a thing now. And knowing that they can, after we go through certain opportunities that they may have to get money, it really changes the whole dynamic of that conversation. And then they become an actual viable buyer.
Yeah, absolutely. Now, I've heard financial advisors talk about, it's always best to put 20% down. And yet my experience has been slightly different. It's not always the best route to go. In fact, sometimes it can be detrimental to try to save up 20%. I remember when I bought my first house, nowhere near 20%. I was not good at saving money. I was really great at spending money. And yet, putting the minimum down in order and buying that house, even though I had mortgage insurance, the market had appreciated, it actually allowed me to get to a spot where I put 20% down on the next house that I purchased, right? So there can be some absolutely amazing advantages for not trying to just save up that down payment. And when we look at the market appreciation over the last couple of years, most people can't outsave the appreciation that we've been seeing. They can't stash enough money aside because if that house went up 10%, they may not have been able to save that in 1 year.
Correct. Well, and then there's the opportunity cost of not owning the home for that year. It appreciates $40,000, the 10% of $400,000, and they're still paying rent and losing out on that side of it as well because they're not gaining anything from that. So the smaller down payments have their place. Obviously, everything comes back to affordability, which is key and the most important for me as their advisor from a financial standpoint. But there are some strategies where you could put 10% down and not pay mortgage insurance. So there's more options out there that I think most people are aware of, which is where you and my job comes in, and that is how do we educate and provide the options that meet their needs so they can make some really good decisions with a very large purchase, probably one of the highest cost price of their lives up to that point.
Yeah, for sure. So, we're looking at the average price for both attached and detached right now, somewhere around the mid 400s. So let's just do 400 because the math is easier. You're a numbers guy, but I got to take off my shoes to get to the counting side of it. But 20% down on 400,000 is $80,000. That's a big down payment to try to save. So if I haven't been setting aside enough money to have $80,000 to put down on a home, what are some ways that I could get a down payment and get into a home?
Sure, good question. And part of that is, so the minimum down payment in that price range would be 3% down to obtain a traditional Fannie Mae 30-year fixed rate loan, which is a very typical conventional home loan. And so 3% is $12,000, significantly different than $80,000.
Yeah, it's a big gap.
As a numbers guy, I even know there's a big difference there. So there's many different resources people have that sometimes either they're not aware that they have or they didn't think through the fact that they're able to utilize certain items that they have to actually obtain liquid cash for a down payment. So some of the ones that are most common would be typical checking or savings account from savings. A lot of people, when in a little bit older generation, used to get gifts called Series E or Double E bonds. And those bonds matured in 10 or 20 years. And a lot of people still have those that I've found. And they completely forgot they had them. And they could be worth $10,000 today. So
that's funny that you mentioned that. I have some savings bonds that my great grandmother got for me when I was born,
right?
That I've not cashed in. And I think the max return on those is about $300. So they still are yet to mature. I think they were 35 years, 40 years. Something,
right? But some had 5, 6, 7, sometimes even 10% interest on them actually in original. Yeah. So anyway, that's one resource, just kind of an obscure one. Recently, we've been doing some Bitcoin. So people who have been investing in Bitcoin, they liquidate that to use as a down payment, which is fully acceptable. They had to put money in to begin with to buy the Bitcoin. So we have to track that. There are things like stocks or bonds. A lot of people have 401ks that they have at work that didn't realize that they could actually borrow against that 401k instead of liquidating it and paying all the high fees. So they could take a loan out, typically of 50% of the balance that is currently in their 401k, and then pay themselves back over a 5 or 6 year period with the consistent withdrawals that they're already taking out of their paychecks for the 401k. And so that's a great way to tap into your own funds. Do not pay any kind of fees of pulling money out of early withdrawal fees and use that as your own cash for the down payment. There's another one is if you own a car free and clear, you can go and refinance that car and use those funds as your down payment as long as you qualify for the new monthly payment. So paid for cars is an asset.
Well, even if the car's not completely paid off and yet you've got quite a bit of equity in it, right? You can still take advantage of that, right? Absolutely. Definitely. Yep. Or if you got some old beater car that you don't really use anymore, you got a nicer, fancier car, sell that second or third vehicle.
It would be worth the investment for sure. You
Yeah,
reduce your insurance costs and a lot of different things, fuel and things
right.
like that.
My dad
Um,
was into cars, my uncle, my grandfather, so it's in there. My dad told me a long time ago, if it's got wheels, it's probably not a good investment. So we could take that bad investment I might have made at 20 years old, flip that into, a good investment into a
yeah,
piece of real estate.
yeah, good advice. I'm sure, and I know you've taken advantage of that.
Right.
So some other options, there are down payment assistance programs that help support the required or minimum requirement of a down payment, whether it's 3%, 3.5%, depending on the type of loan, where somebody, as long as they qualify for that type of loan, and mostly it's income limitations, then they would be given a second mortgage, different conversation, but monies to be used towards a down payment so they don't have to have cash out of their own pocket for that. And it's a wonderful way to get into a property with the intent of getting in and hopefully sometime down the line look at possibly refinancing out of those loans as soon as possible because the interest rates are just a little bit inflated.
Well, and I don't have to be a first time home buyer to take advantage of that, right? Now,
You
I
do,
get this question a lot saying, hey, I'm a first time home buyer, so there's programs available. We're talking about programs that are available even to somebody that's bought a home and owned a home in the past.
that is correct. And that's the beauty of those loans. You can't have a home that you own now that you use the down payment assistance program and keep that as a rental and then buy another home using it. You're not allowed to do that. You can't have two at the same time, but you can use it over and over. So if you have a loan, for example, CHAFA, which is very common, it's called the Colorado Housing and Finance Authority. That's what the acronym stands for. They will allow you to own a home today, sell that home that was a CHAFA loan, and use another CHAFA loan to buy the next property should you need or want to.
Yeah.
So you're right. I do get that question a lot. Is I'm not a first-time home buyer, so I don't qualify for down payment assistance programs. And the accurate answer is you can, as long as you don't make too much money given the income limitations.
Yeah, you may absolutely qualify for it. So if you've owned a home in the past or you feel stuck in the home that you're in, and don't might you might not have the equity in the house or you might not have the down payment, you might still be able to take advantage of those down payment assistance programs.
Correct. And another one that comes to mind is if somebody's a veteran, there is no down payment requirement at all. So there's no need to do anything other than show up and come to closing. You have to have some money for earnest money and there's some closing costs, but the down payment requirement goes away also.
A great opportunity to get into owning real estate, right? Is
Mm-hmm.
a thank you for those that have served our country.
Without a doubt. Some other very common resources for down payment assistance are gifts from family. That happens more frequently than not. There's a bit of a misunderstanding about gifts and the donors who are gifting the funds, as far as is there a taxable event to them from an income tax standpoint.
Hmm.
And a lot of people aren't aware of the different options that surround that. So there's a $15,000 per year per person gift that a family member can give to somebody without the person giving the gift, the donor, having any taxable consequences. The recipient, the person receiving that money, can receive as much gift as they want or that people will give them, and they don't pay any income taxes whatsoever. It's all based on the donor side. So sometimes if it's a couple and their parent wants to give them money, they can give each person $15,000 or a total of $30,000 without any taxable event.
Wow, that's a pretty good gift, So for those watching, make sure you have good relationships with family members.
And maintain them and keep them.
Yeah. Yeah, don't just keep it up to the point that they give you some money. That's not a good relationship.
Exactly. Here's another one that's very common that I've run up against lately quite a bit, and that is cash at home.
Okay.
And people will say, well, I have $10,000 cash sitting in my safe at home. I'd like to use that to purchase a home. And that becomes a little bit more challenging for us in the mortgage industry because we can't really source or track the cash and where they received it from. And so there are some strategies around depositing that cash into your bank account and letting it sit there for a couple of months and then look to purchase, because once the money has been in the account for at least 2 months, that large deposit will no longer be part of the transaction. And so then we'll be able to show that that person has their own funds in the account now.
Yeah.
So that's a timing issue, and it's something that definitely gets talked about quite a bit lately. I'm not sure why, but maybe because of everything that we've been going through in our society, people are holding on to some cash at home.
Well, this impacted a listing of ours. So this was not Mitch as the lender, uh, a different buyer, right? Buyer we didn't represent. They ended up with large deposits into their bank account, and it delayed closing for quite some time as they then had to go through verification proof. It brings me back to a point we want to educate this and communicate this often with our clients is when it comes to the mortgage side of it, don't do anything without talking to Mitch first. Don't deposit money, don't spend money, don't buy anything. Just pay your normal bills. Anything else, consult with Mitch before you do financially.
Right, right. And that point brings up another point, and that is if someone does have cash, instead of using their own wage income that comes into their bank account each month for living expenses, we have them use the cash to pay rent, to pay their car payment, to buy groceries, and leave their other money in the account. And that way, that money is just regular funds that come and go on a monthly basis.
Yeah.
So there is ways to strategize, again, depending on how much money we're talking about on cash, that can be worked with.
Yeah. So again, connect with Mitch, connect with your lender partners, because strategies like this can make a big impact and help you get into home ownership a little bit easier.
Right. And Matt, you work with investors, correct, who purchase homes for rental property?
Yeah.
So one question I get quite a bit from investment buyers, and that is, can I use a home equity loan of a home that I currently own and use that equity to actually purchase another home and use that as my their down payment?
Right.
And there are some larger institutions that do not accept that as cash for a perspective of a investment purchaser, but we do. So if that investor has a large line of credit, a home equity loan to say, hey, I've got $100,000 available that I can borrow against in my own home, they're allowed to utilize those monies as their down payment for the investment home they want to purchase. So it's another resource that is used, and it does not tie up any liquid cash whatsoever for that buyer. And if you really look at it, it's 100% financing.
Yeah.
You could buy a rental property with 100% financing as long as you have that kind of equity and you qualify.
Yeah, which, I'm glad that you brought that up. That's got me thinking about an investment property that I might need to just pull a home equity line of credit to.
Well, they're a good resource to have if you have that kind of equity in your home for taking advantage of opportunities that might come up, for sure. Some other thoughts that I have are we just recently had an employer give a gift to one of our buyers.
Okay.
Which is fully acceptable. We just have to document it correctly. And here's another very unusual one. We had a pastor, his congregation donated their down payment.
Okay.
And we were able to use that for his down payment to purchase a home. So,
well, I think the congregation technically is donating all of his income, right? That's how they get paid.
Well, that too. This was in addition to. So I had never experienced that in the last 30 years of doing home loans. That's the first time I ever had to track those funds for a down payment. And what a great feeling. I mean, I was just so happy for them. They were so happy.
Yeah, absolutely. And learned recently that in specific situations, if you're buying a family member's home, that family member could gift a down payment in the form of equity in the home.
That's correct. We actually have been doing quite a few of those recently. So it's a simple process. It's just calculating the numbers accurately. But the home oftentimes is free and clear, and the son or daughter or whomever, grandson, grandchild, is purchasing the home from that family member, and they're allowed to gift whatever equity is left in the home to their family member, and they can cover closing costs. They can do everything so that new home buyer can buy that property without any money out of pocket, actually.
Oh, wow, that's pretty impressive.
It's a wonderful way to do that, and oftentimes it's more of a gift, kind of an inheritance gift in many cases, to start that process that way as well.
Yeah.
So these are all really good and favorable things. There's things I thought we could also talk about, which would be what are sources that are not acceptable sources.
Yeah,
because I also run up against that as well, and then we have to go backwards and try and figure out how to make it work after the fact.
Well, that's an important piece, and I referenced that home sale that we had where we were the listing agent, and that's a situation that they ran into. Was money that was coming in was not an acceptable form, and it just created more and more issues. So again, this is why it's critical to have this relationship and completely honest, open, and transparent as to where money's coming from and what this looks like, because Mitch and other great lenders, they're your partner through this, and they'll say, here's how we accomplish what it is that you're trying to accomplish, without just saying, nope, it doesn't fit into this box, so we can't do it. So tell me about some places I might have funds that aren't acceptable.
Well, when we touched on that was just the cash. So that's one that we have to just work through timing wise. And like I said, utilize their deposits in lieu of using their cash to do that. Second are cash advances on credit cards. I've seen quite a few of those for the initial deposit called the earnest money deposit, where someone says, yep, I had my $2,000. We wrote the offer. That's really good. For us as the lender, we have to verify where that those $2,000 funds came from. And if they say, well, it was a cash advance on a credit card, that's considered an unsecured loan, of which then we cannot use those funds because they were not the borrower's money to begin with. They have borrowed that against nothing of their own. They didn't have an asset to borrow it against. So that becomes unusable money. There's definitely a way around that, but that's not what we're talking about today. But that is one of the sources we see quite often. Along those same lines is using your credit card, just a credit card. That is also not an acceptable source for utilizing for a down payment. And any kind of unsecured funds. So if you go get a signature loan, or if you get a loan from your best friend, those are not considered your own funds or using an asset to back that money. So those are not acceptable sources of funds. And I'll bring up one that we kind of have an unusual term for it. It's called a straw gift donor of funds. And the short version of that is somebody else is giving money to the person who's giving our buyer a gift. And that is not legal. It's a form of fraud. It's mortgage fraud. And if we found something out like that, we would have to say those funds cannot be used for this transaction. Let's look at different opportunities.
Yeah, and you bring up an important term that I want folks to pay attention to. Mortgage fraud is a real thing. It is. It's investigated. It's prosecuted. So it's critical. Have the conversation with Mitch and your mortgage officers, and don't commit loan fraud.
Correct. And there's never a need to do that, ever. There's too many ways to work within the system that is acceptable, that is legal and legitimate. It may take a little extra time, but that time is better spent than time elsewhere, like behind bars. So rather be behind your windows in your home as opposed to somewhere else.
Yeah, I don't know about your goals for the next 15 to 25 years. Being behind bars probably interferes with your tennis game.
It would be very disruptive for sure.
I don't know if they have a tennis court out on the yard for that. We'll try not to learn that firsthand.
Exactly. Well, and you and I take an oath, and that oath is that we have a fiduciary responsibility to our clients.
Yeah.
And they really rely on our guidance and our professional knowledge of how to do what we do and how to get into a piece of real estate properly, legally, affordability wise, and it's very simple to do. We just all have to work together and communicate from day one to make sure we can get to the finish line, which is a closing and everybody being happy and happily buying their first home or another home the right way. And it's very simple to do it that way.
Yeah, without a doubt. And I have walked away from clients who have expressed their desire to do something that would be constituted as loan fraud. I don't need to be affiliated with that kind of transaction. So we'll walk away if they choose to continue to pursue down that path, and I know about it, right?
Right. And some people just don't know that that's what that would be, and so we just correct it and we move forward and just adjust accordingly.
Without a doubt. And that's the conversation is, hey, what you're talking about doing is not allowed. We need to find another way to do it, or we're going to have to part ways.
Correct. And one other version, kind of a version of down payment support, kind of coming back to that, would be if somebody co-signs with a family member and the child, let's say, who's going to be occupying the home doesn't have any funds, but their parent who's co-signing with them, or aunt or uncle or a family member, has the funds, that is usable funds for the transaction because that other party is on the mortgage with the owner occupant. So it's a combination of everybody's assets. So there's no gifting, there's no having to go get IRAs or 401k loans or anything like that, should that other party have liquidity or liquid funds available to buy a home. So sometimes they don't think about that either.
So if my scenario is I'm a young individual and maybe I don't have enough of the right credit, mom and dad decide to co-sign for me, the down payment could come from mom and dad.
Correct, 100%. And then you tap into credit, and that's another layer in there of available credit or depth of credit, how long someone's had credit. We do a lot of loans for people who are full-time students. So they're not working, they're a full-time student. And their mom and dad or family members will co-sign to be the one who supports the mortgage payment. And that's a fully acceptable mortgage transaction where they could buy a home and not pay rent if they didn't want to during their remaining 3 or 4 years in college.
And personally, I think that's a fantastic idea. Normally, I would have said, you're always going to have renters in a college town. I think COVID has, again, squashed that always thought process that I had, though I know that there's still some students on campus and living near campus in housing. Yet, what a great opportunity to be a young student, have some roommates, which I'm probably going to have anyways, but yet I'm building my net worth and I'm setting myself up for a financial future by quote unquote being the landlord right there in my college town, in probably a nicer house than I would have if I was just renting from, Joe Schmo, the landlord.
Sure. And if when you graduate and you decide you're not going to stay in that city, you can keep it as a rental for future investment.
Yeah.
Yeah. Or sell it and do it somewhere else. So anyway, so the nice thing, and I think this was a great idea as far as topic goes today, is there are so many misnomers about having to have back to kind of how we started. There's so much money that you need in order to purchase a home, when in fact it could be anywhere from 0 to 3% down or more, of course. But sometimes leveraging with small down payment, even if you have a lot more money, is also a smarter idea, because you can use those funds for different opportunities as far as investing goes as well.
But I think an overarching concept is, the government wants people to be homeowners. So there's a lot of programs to help get somebody into home ownership. So what a fantastic opportunity to strike up and have a conversation. And it may not be a scenario where you're buying a house this year or next year, yet building that roadmap as to, I know I want to be a homeowner someday. How do I get from where I'm at to that home ownership that I want to be in?
Exactly. Yep.
Yeah.
And it's the wonderful, there's been many successful stories of people being financially set over time by owning real estate. And you have to start somewhere. And like you mentioned on your home, I bought my first home with no money out of pocket, literally zero. And we went from a $400 rent payment to a $1,300 mortgage payment. And I said, how are we going to do this? That's 3 times more than what I'm paying now.
Yeah.
And we did. And we got to keep cash in our account because we didn't need the down payment. And if we needed supplemental funds, we had it there. So there's a way to make it work. And it's just shocking how you can adjust and adapt your financial situation to purchase a home when you thought it was such an overwhelming financial concern. And in fact, sometimes it's less expensive than rent in some cases, especially with rent being where it is now.
Rent's astronomical, and those numbers are favorable for you. They weren't nearly as favorable. I think my rent was $380 a month for my obligation in this house that I shared with some friends, and then my mortgage went up to, I think, $900. So it more than doubled.
Yep.
Yet I had tenants, roommates that rented out the house to actually keep it affordable. And there were a lot of months that I paid very minimal out of pocket for actually owning my home. Now, I sold it for, pretty good profit, sold it to some friends who have since made a massive amount of equity because the market's continued to go up. So if they ever want to sell and they want to sell it back to what I sold them for, I'd buy that house back in a heartbeat.
It's very gracious of you, Matt.
Yeah. So just, gracious and just completely unselfish.
There you go. Exactly. Nice. Well, good.
Um,
Good.
Well, I love this conversation, Mitch. I really appreciate the topic because, looking back when I was 23 years old, I bought my first house. Now, most first-time home buyers are closer to their mid-30s. What I found was that there was so much misinformation from my friends as to whether or not they should be a homeowner that it clicked with me, and I felt passionate at the time to help make it click for them. And to have a resource like this to talk through different options and creative ways to make it happen legally and ethically is just a topic that should be on people's minds, because the net worth for somebody that owns a home is significantly higher than those who are renters. And it just provides significantly more options for somebody than being, than being a tenant, right? You can, one, do things at the house that you want to do, but you can leverage that real estate to do other things with.
That's correct.
So
exactly. Great thought. Great position to take. And I think more people that take advantage of that possibility, the better off they'll be in the long run for many different reasons. Pride of ownership, financial positioning, future investing, things that creating a family, creating a home, a legacy. I mean, so many things come from owning your own home. It's wonderful.
Yeah, it's been huge for me. I've always appreciated having that opportunity for home ownership, and even though the prices have gone where they are, it's still affordable. We can still get into, even as a first-time home buyer that might not have a massive down payment or a massive income. It's still doable there. So again, Mitch, thank you so much for joining us. We're going to be having another conversation here relatively soon. Our next conversation, we're actually going to be chatting with another friend of mine who's works for a credit repair company. Because again, if my credit's not where I need it to be, there's a roadmap to get there. And in a short time, credit can be fixed. And, Mitch can do some things and have some conversations there around credit. So that's going to be a topic for our next live video.
Great. That's a great topic. And there's a lot of value to be learned from that. And sometimes people got themselves in a position that was unexpected, and working themselves out of it and then being able to become a homeowner is an incredible feat to accomplish. So I look forward to watching that as well.
Yeah, awesome, Mitch. Well, again, thank you so much. I appreciate your time. Any final parting words on our topic today?
I would say let's hope for low interest rates for the next 2 years is what we're hearing. And that'll keep the market open for people and the possibility of owning their first home should it be their first time buying. And that is what we're here to do, is to help them achieve whatever that goal is for them. So those would be my parting words: low interest rates.
Low interest rates are historically low. So
exactly.
Again, thanks so much, Mitch. Again, thank you everybody for tuning in, and we'll catch you on the next video.
Great. Thanks, Matt. Have a good afternoon.
All right. You too, Mitch.
Thanks. Bye-bye.